Gold investment rule: 3 times bankruptcy of stock speculation. Jesse Livermore and her death for those who break discipline. Once a time, Livermore went to any stock exchange in the United States, then the trading floor suddenly had hundreds of customers coming to the transaction just to see him. Born in the town of South Acton, Massachusetts in a peasant family, Jesse Livermore dropped out of school at age 15. Having earned a job at Paine Webber Securities in Boston, Livermore entered the financial world by working to keep up-to-date information about stock prices, bonds, and commodities on a big board. In the course of his work, he kept the price fluctuations in mind and realized that prices often change in a predictable direction. Accordingly, he believed that he could win the market to get rich. This is reflected in the famous Livermore quote, "Wall Street is still the same. There is nothing new because of the old speculation like earth. Anything that happens on the stock market today has happened before and it will continue to happen." The name Jesse Livermore was then associated with dark days when he realized that strong slumps were always on the market after a long period of growth. Throughout his speculative history, Jesse Livermore is a famous man with lots of drifts from super disasters. Most frequently mentioned is the 1907 panic attack or the San Francisco earthquake in 1906, the largest natural disaster in the U.S. by that time, until Dark Thursday, October 24/1929. However, short-selling genius is not only famous for classic deals, but his bankruptcy times are equally solemn. Living on the stock market, making and keeping money has never been easy, even for Jesse Livermore. And mainly because of those times, it was all about breaking the investment rule, after the quick victories in the market. First bankruptcy in New York. In 1899, at the age of 22, Livermore earned $10,000 from black market speculative transactions, or nearly $300,000 of today's era. After earning that huge amount, he decided to move to New York, took a beautiful wife named Nettie and made a formal transaction at Fullerton's brokerage firm in 1901. However, the stock price of telegraphs was 30 to 40 minutes lower than the real market, making Livermore's strategy more difficult than the expensive living costs he maintained. The pressure to make more money makes short-selling genius become emotional. Livermore had an expectation of a sharp slump in the market at the time, so he decided to short-sell Northern Pacific shares in a M&A fight between J.P. Morgan and Hill. As a result, Livermore's sentiment expectations made him fall for the first time because Northern Pacific shares continued to rise sharply while unable to cut losses due to delays in telegraphic transactions. Second bankruptcy due to being cheated in cotton business. Divorced wife, losing more than half of her capital, but Livermore remained resilient to Wall Street and traded carefully until he removed the net assets of up to $50,000 thanks to the up market. During this time, he was always wary of any brokers or consultants with internal information, which was also the investment principle that Livermore was proud of. In 1906, he noticed an unreasonable increase in prices and a strong selling move of Union Pacific Rail shares and decided to sell short at a peak of $330 per share. All Livermore friends thought he was not conscious until the stock fell 70% and only $92/share remained. Livermore earned more than $250,000 in everyone's astonishment. However, easy money and self-sufficiency triggered Livermore's carelessness and collapse again. In 1908, a notorious commodity speculator wrote a letter to Livermore. After the fate meeting, Livermore was so mesmerized by Percy Thomas's story that he forgot the principle of being cautious of insider information and ignored all the advice of others. Livermore, after being persuaded by the infamous commodity speculator Thomas, was constantly buying dozens of tons of intimate cotton. He knew the supply was in surplus. But what Livermore did not expect was that Percy Thomas was the speculator who constantly sold him tons of cotton goods. As the price went down, Livermore broke the principle of cutting losses and buying more. Until losing 9/10 assets worth millions of dollars, Livermore became rational and escaped from position. Last bankruptcy after losing almost all assets, What this short-selling genius made was to stay on the market with the mind to continue to rebuild after the second bankruptcy. Although the family was troubled, Livermore was very sensitive to the bubble of the market. October 1929, Livermore decided to sell short stocks. In a mere dark Thursday day, Livermore's assets reached $100 million while the United States fell into panic. Livermore also officially became the biggest short-selling legend of the time. However, at the peak of the day, Livermore once again encountered white hands. Although no one has ever known the details of this third bankruptcy by Livermore, many judgments suggest that Livermore may have expected too soon and bought shares when the market did not really hit the bottom in 1930, 1932. After that, he continued to bet on commodity markets and losses until 1938. At the age of 60, he had to declare bankruptcy while being investigated by the SEC Securities Commission on insider trading and completely lost motivation because of the family breakdown. After all, Livermore's failures came mostly from a lack of discipline and abandoning his own principles. A small part due to the process of getting rich so fast that short-selling genius quickly forgot what brought me to the top. Livermore's opening book became a classic proposition for every investor involved in the market. Speculation is one of the most exciting official games in the world. However, is this it must be a game for stubborn people, lazy thinkers, emotionless people, or those who want to get rich quick. They will die in poverty.